again this week for Jaw Time with Realtor Jeet, and I want to welcome a very special guest who this is the power of collaboration. One of my team members, Michael Ragosta, had introduced me to this great and wonderful lender, and I want to introduce to you our friend, Team Jeet's lender, Donnie Schultz, and Chelsea. Chelsea is Michael's wife, so I have a pleasure of having her on here. She is. Welcome, guys.
Hi, everyone. Harjeet, thank you
Sorry.
so much for having us. Again, my name is Donnie Schultz. I run a lending team for Embrace Home Loans out of our Hop Hog, Long Island branch. We're a top 1% originating team in the entire country. We work with a lot of home buyers. We're having a lot of success right now. And really our goal is to help our buyers navigate a very difficult market right now. So we are seeing buyers dealing with some frustration with prices, now with interest rates. But it's definitely still a time that buying a home makes a lot of financial success. And we'll probably talk a little bit about that today, right, Harjeet?
Yes.
Yeah.
I'm so excited of what we're going to talk about today. So I know we were speaking earlier. There's a lot of buzz going around the interest rates and the inventory. So we're going to go in on all of that. And thank you for such an amazing introduction. And Chelsea, you can introduce yourself as well. I think you just got booted off.
Back.
You're back.
I somehow lost connection. I'm Chelsea. I've been, working in the mortgage industry for about 12 years, and I recently started with Embrace. So I guess it's not so recently. It's been about a year now. And I love working with Donnie. We've been, doing this and working together alongside each other for probably, 8 of the 12 years that I've been in the industry. So I'm happy that we are a team, and Embrace has just been a great company to work for.
Oh my gosh, that's so amazing. And I know I've met Donnie here and there before Michael actually formally introduced us. And it's just amazing to know such great people and the value that you give to your clients and your partners, that your professional partners that you work with. So this is it's a pleasure to have you guys here today. And oh, my pleasure. So I guess we'll start with the first thing that we were talking about is something that everybody is really either concerned about or interested about. There's so many different feelings around it. And I guess let's, if we want to demyth the myths that are going around interest rates.
Yeah, so we've obviously been seeing a lot of pressure on interest rates since the beginning of this year. We send out a weekly market update to our realtor partners, and we've been talking about it every week. What's behind this increase in rates? It shouldn't be a surprise to anybody. It's a shift in the Federal Reserve policy to fight inflation. So really, inflation is what is driving rates higher. Federal Reserve is trying to get inflation under control. They're a little bit behind the ball on doing that, so they have to be very aggressive. And the way that they're being aggressive is by removing market accommodation. So if we go back to what drove rates down to historic lows, COVID hit, and the Federal Reserve came in and provided a lot of support to financial markets. They were putting money into the market. What happened was also because of COVID, supply chains got backed up. So if you look at things like the cost of lumber, as more people were spending on construction and lumber supplies started dwindling because of supply chain constraints, the cost of lumber went up. That's happened across the board. That's happened with gas. That's happened with food. It's happened with energy, and we're seeing this pressure on inflation that has gotten to a point where it's very concerning for markets, and it should be. So now we're seeing interest rates go up. The question, and we see a lot of different thoughts as far as what's going to happen moving down the line. We're starting to see buyers who are, we're looking at rates in the low threes back in December and early January, and now they're seeing rates push into the 5% range, and we're having these conversations with buyers who say, hey, maybe this isn't a great time to be in the market and try to buy a home. The other side of that conversation is, owning a property and buying a home and having a 30-year fixed rate mortgage is one of the greatest hedges against inflation. So if we are going to see inflation continue to be a problem over the next 2, 3, 4, 5 years, which is possible, then even a 30-year fixed rate mortgage at 5% is going to put you in a better financial position than renting for the next 5 years. Right now the inflation rate today came out is 8.6%. So a 5% fixed rate mortgage is going to put you in a better position if that inflation rate stays at those elevated levels. It's something that we're keeping a close eye on. Buyers, what we think, there's a couple of things that I personally feel. One, I don't think that we see a drop in home prices, because that's a conversation that we've heard. Hey, is this going to drive prices down? I personally do not think so. I don't think values will be going up at 20% clips every year. I think that buyers are going to be much more conscious about what they're bidding and how much they're going to overbid, because we have to stay within budgets, and now those budgets are getting a little tighter because these rates are higher. The financing is costing more money than it did 2 years ago. But we still have the buyer pool out there, and we still have an inventory problem, which is going to keep these prices where they are and probably slowly going up as we move forward. So when we look at whether right now is a good time to buy, I think it's a better time to buy than it's going to be 6 months from now, a year from now, because I think prices will probably be a little bit higher. I think rates have the potential to continue moving higher here. We should slow down on how fast they're increasing, but there might still be some pain in the rate markets moving forward here.
And historically, they're still super low rates. So
when me and Chelsea first came into the business, rates had just dropped below 5%. And, some of the old timers would say, you'll never see this again, right? Take advantage of it, because they're going to be back to 6% before you know it. So they are definitely still, historically speaking, low.
We've seen them so low the past couple of years. It's been a lot of fun.
And it's always going back to the other side of it, right? It's, what's the rental market doing, right? And I think the rental market, it's not talked about as much, but I think the rental market is in worse shape than the purchase market. Inventory on the rental side is drastically low. And what that's doing, combined with inflation and energy cost increases, it's driving up rents. So I think I just saw a rental report that year over year, average rent has gone up 10%. When you're renting, there's no protection against that, right? You take a fixed rate mortgage, you know what the majority of your payment's going to be. Your property taxes might increase a little bit. Your homeowner's insurance might increase a little bit. But the bulk of your payment, that principal and interest portion, that's fixed in. It can't change. It can't increase on you. And that goes back to what we're saying, that a fixed rate mortgage is one of the greatest hedges against inflation, because your cost is fixed. It doesn't matter if inflation goes to 10% or 12% or 15%, or if rates go to 8%, right? You're fixed in at where you're locked in today. So that's what we're focusing on. We're very numbers oriented, right, Chelsea? So we provide very detailed planning. We want to make sure that we have payments out of pocket in front of our borrowers from day one, and that financial plan is going to put them in the best position to move forward on a purchase. So we are adjusting some of those budgets, right? Some buyers have had to take a little bit of a step back on price as these rates go up, and it's a day-by-day analysis, and we're just trying to stay proactive and keep our buyers in a good position.
That's good, because I think that's a lot of people's position right now, because since they've gotten a 3 or 4%, and now they're looking at something else, it's changing their budget into purchasing a house. And right now, that's the prices are just getting more higher. They're increasing, and it's going to become more harder to find a house, as it already has been in the last 2 years. But we're working hard to find that inventory for our buyers so that they can find it and finally purchase a property. I love that you said you're numbers oriented and you're looking at, your buy, how to put somebody into the best financial position to purchase a house. And I think that's just so important, because a lot of people go into the housing market looking for a house and they don't know what they're looking at in terms of what their mortgage is going to look at, what their 30 years, the next 30 years of their life is going to look at getting into this mortgage, or even refinancing. If they're looking at refinancing, like I got my house at a low interest rate, not the threes.
See, still good.
Still good. It's in the fours, and it's still good because yeah, you're right. Even then, it was like lock it in now because we don't know if the interest rate was going to go up.
Right.
Yeah.
For a little bit, and then it went back down due to COVID. So how do you position? How would sellers position themselves and to sell their properties? And because we have a very low inventory, and here's one of the biggest questions that they have or concerns that they have. And I'm just going to stop and reset real quickly. For anybody out there who's watching, if you're on YouTube, LinkedIn, or Facebook, you can comment any questions that you have in the comments section, and then I'll bring them up over here on the screen as well. And then I'll show you a way to reach out to Donnie and Chelsea. So sellers are worried or concerned that if they do put their house on the market, now they won't be able to find a house for themselves since there's low inventory and the concerns of that interest rate.
Yeah, it's definitely a concern, and it's part of the planning that we look at. So, one of the most common things that we have when somebody is selling to buy something new is how can, can the new financing be structured where you don't have to include that sale, right? Where the home buyer who's selling their home has the flexibility to purchase the new home without selling their current. And usually that comes down to one, the carrying expense of both properties, but two, also the down payment, right? A lot of sellers are planning on taking, the equity that they built in the house that they own and putting it towards the new house, right? And that's one of the other great things about, buying a home, right? You're building equity in there, you're paying down your balance, your value's going up year over year historically, right? We can't say that it's going to be the same every year. We've had some great years, over the last decade with home appreciation, but most owners right now have a good amount of equity in that house, and it makes it more justifiable for them to go to the move up house, right? Go to the house that maybe cost them another $300,000 because they've built up that wealth in the current property. So we're always going to look at options to eliminate that sales contingency because that adds pressure to getting an offer accepted, but it also adds pressure for the seller, right? A lot of people don't want to necessarily close on their house and have to move same day. The nice thing about us being a direct lender for Fannie Mae, Freddie Mac, FHA, the Veterans Administration, and servicing our loans is that we are able to offer things like recasts on the mortgage. So we've had buyers who have closed on their new house. They've leveraged the financing. Primary residence, we can lend up to 95% on a conventional mortgage. And then after they close on the new house, they've sold their current house and they take that money and they make a lump sum payment down. We'll actually recalculate the payment for them. So that, that financing is the same as if they would have sold simultaneously at the end of the day. So that's one option we look at. It's not available for everybody, right? Because that borrower has to be able to carry the expense of both properties, and some borrowers can't do that. The good news for the borrowers who can't do that is that it is still a seller's market, right? There's not a lot of inventory. There's still a very big buyer pool. It allows the sellers to dictate the terms of their sale. So we have a ton of long-term contracts right now. We have accepted offers that we know the closing is not going to occur until August. It's April 12th. I've probably got 4 or 5 contracts in that we know that we are not closing until August. We have our files approved. We pretty much are ready for closing on our end, but that's allowing those sellers to go out and put the offers in and say, hey, yeah, I'm selling my house, but I can close tomorrow on the house. So anybody who is thinking about selling and buying, they're concerned about inventory, you do have a lot of control over the buyer you choose. You could dictate the terms, right? You could say you might have 2 different offers. you say to one offer, hey, listen, I need flexibility until August or September because I'm worried about finding something. One of those buyers is going to say yes. Probably both of them will. Probably both of them will give you that kind of flexibility. So, right now, you probably want to be a little bit more careful with the offer you accept in scenarios like that. You want to make sure that it's a lender who can lock in an interest rate. So, our contracts, we have the ability to lock for 120 days. Every rate we quote is 105 days of lock coverage, just because that's how, contracts are 90 days here, sometimes a little bit longer. So we want to make sure we can cover the full length of the lock. But right now, there's probably deals out there where buyers don't qualify anymore if they went into contract a month ago or 2 months ago and they haven't locked in their interest rate. So as a seller, you want to be very careful with that. You want to make sure that you're asking the right questions. One of those questions is, hey, one, how fast does your lender work? Two, is your lender going to be able to protect you if these rates keep going up? Because you don't want to find out 2 months from now that now this buyer doesn't qualify because rates have gone up another percentage point and their payment's too high to qualify.
That's great. That you're so right with that, Donnie. I just had that myself when I put an offer in for a property where this was back when it was snowing, January. And they said in order for them to accept the offer was that the contingency is that they're moving in June.
Right. Yeah.
They want to hold until June to sell the property. And if your buyers are willing to wait that long, then we'll accept the offer. So there are a lot of situations and scenarios like that. And I'm so glad that you mentioned to make sure that you find a lender that can lock in that interest rate, because now January, that was like a 3% interest.
3% interest rate. Yeah. So if they're locking in today and they're looking at 5%, that's, a $500,000 mortgage, that's a $400 increase in payment, right? That could cause that buyer not to qualify. It's a decent jump, right? And that's why, again, we're focusing on planning. And some buyers have had to adjust their budgets. So as a seller, I mean, for me as a seller, if you were thinking about selling, now's the time to get off the fence, because if we see more pressure on interest rates, I think we start getting away from these way overbid offers to get the property. The last 2 years with rates being really low, inventory being low, a lot of buyers, it's can't really think of how many times we've had buyers who just said, hey, I was really aggressive on an offer. I went 40, 50,000 over asking price, and they weren't even close to the top offer.
Yeah,
I think we start seeing that disappear. I think buyers are going to be much, much more conscious of that top line number, because now the money's not as cheap, right? It's not as affordable. So I think for buyers, it's going to come down to terms, right? The team that you surround yourself with is going to be super, super important. The names on your pre-approval, the realtors that you're working with, I think that becomes much more important over the next 6 to 12 months as these rates stay at these elevated levels, probably go a little bit higher. And if you're selling, you're going to get to a point where, hey, if you list your house for 500, 550, you might only be getting 500, 550, right? If you list it and you're expecting to get 600 or 625, like, maybe you heard your cousin got 6 months ago. I don't know if that's going to be the case for too much longer. We definitely are still seeing properties go. We're seeing a lot of offers on them, a lot of competition. But we're also, on our side, this weekend I think we had 7 or 8 accepted offers on properties. So we're starting to see offers get accepted with the correct terms, and those buyers did not have to be very aggressive over asking price. So we're starting to see that, we're starting to see it level out a little bit. And we're, again, for me, it's really stressing, hey, you have to be ready. You have to have your pre-approval in place. You have to have a reputable team in place. That goes very far with getting these offers accepted. We have our Approved to Move Plus program. So we actually, put our clients through a full credit approval. They're fully underwritten on conventional financing. We could also run the properties through our in-house appraisal software and our team, and we'll try to guarantee the value on the offer that's being submitted. So we guarantee the terms for the seller and the buyer. It works, for select properties. We can't say that it'll work on every offer, but we do have success with it. So anything we can do to put a buyer in a better position to get an offer accepted, we're doing it, and we're having success with it. I talk with lenders throughout the country, and we talk about what we're seeing, and the biggest complaint is not being able to get offers accepted. And knock on wood, we've been getting a lot of offers accepted. I think it's because we do things a certain way, and we make sure that our buyers are ready and that offer goes in the best light.
It's like you said, I'm going to put it right here. Have your plan ready. And that includes, who's on your team. And I like that you said who's on your team versus who's your realtor, who's your lender. This is your team. This is your round table who's going to help you find they're going to help you find the best home for you. And then they're going to work in your best interest to get you into that home as quickly and strategically possible in a crazy market as today. So your round table of professionals are so important. Who your lender is, who your realtor is, title company, attorney, everyone. It's communication is just so important. And I kid you not, I had gotten an offer accepted because my buyer was approved by Embrace Home Loans.
Yep. You'll start seeing our name a lot more. So we've rapidly been growing here on Long Island. We're not a small bank; we're a large bank throughout the country. But here on Long Island, we've rapidly been growing over the last 6 months or so. We just opened up a branch in Melville. We're opening a branch in Garden City. We're doubling the size, or we've doubled the size of the Hop Hog branch here. So it's there's a lot of big things happening on Long Island for Embrace. You're going to start seeing our name and our loan officers a lot more. But we're aimed to lend. We want to make sure that we are providing an experience not only for our clients, but also for the professionals on the transaction, the realtors, the attorneys. We want to make sure that our deals are seamless. They're fast. We underwrite in 24 hours. Our team's clearing our purchase loans for closing in 2 weeks, Chelsea? So we work very fast, and that experience translates to more accepted offers. If realtors have worked with us and they've gone through that experience and they're comparing 4 or 5 different offers, and they have, the Schultz team at Embrace, and they've gone through this experience with us, that offer is going to go to the top of the list. That realtor is going to tell that owner, hey, this is going to be a smooth experience, right? It puts us in a good position to get the offers accepted, but also puts our buyers in a position where they don't necessarily have to be the highest offer. We get that kind of feedback. Hey, you aren't the highest, but we're the most comfortable with your approach with the offer, your name, the follow-up. I mean, we're very active with those offers when they go in. We reach out to the listing agents. We have a conversation about our process and our clients' qualifications, and we walk them through what to expect once we go into contract. And not only what to expect, we then deliver on it. It's not a song and dance where we say, hey, we're going to have this. We're going to be telling the attorneys they could schedule in 2 weeks, and then 60 days later, people are calling us like, "What are you guys doing?" That doesn't happen with our team. It's a very streamlined process.
No, absolutely. Like I said, I've experienced it, and I've seen it happen. And I tell you, like, when the listing agent called me on the other side and said, "You know what? I know their lender. I've had experience, and we've spoken at what's the best option for the seller." And that was the best option, because they knew that this was this is a locked in deal. You're not going to lose on this deal. Exactly. And that's so important, is the experience that the professionals deal with, that the buyers deal with, and that the sellers. Now the sellers are looking, wow, this is amazing. I had no hiccups during this experience. So if I want to find a house in the future, I know who to call. I'm going to tell my realtor, hook me up with this person. And that's just great. I love that. So buying the experience is so important. Buyers and sellers both, they're emotional. not only are you emotional when you're selling or purchasing a house, you're looking at the logic side of it, and you're seeing, okay, who's delivering what they say they're delivering. And Team Schultz, I've seen so many. You actually deliver what you say you're delivering, and I'm so grateful for you guys to do that. I mean, I see your social media presence all the time, and you're doing amazing with that. Oh yeah, make sure to follow Team Schultz on Instagram.
Yeah, we have a lot of good content up. It was funny. We actually put something up today that was from the market update yesterday, and
Okay.
last week was a bad week for interest rates. We saw a lot of pressure for pretty much the whole week. We sent out the market update yesterday. Rates were up again yesterday, and we talked about why, and we talked about some levels that we were at and what we were watching, and we were talking about a potential pullback. We said, hey, listen, we've gotten to a point where rates have risen so quickly and so fast that we would expect markets to pull back a little bit. We're at some very key levels where we would expect some buyers to come in and maybe drive rates down a little bit more. But we were watching a couple of things. We're watching the inflation data this morning. We were watching where markets handled those points. And what happened today is we got through the inflation data and we started to see that pullback. So, we're very in tune with the markets. We want to educate. We want to let people know what we're seeing, what we're looking at. We want to put, it's not a good time for buyers to float, but there are opportunities to potentially capture these pullbacks and get your rate an eighth or a quarter lower than what we were seeing yesterday. We did that 2 weeks ago, right before the jobs report. We saw another opportunity. We were expecting a pullback, and we locked in a large number of buyers at rates that then shot up almost 0.5%. So we have buyers who are very, very happy right now looking at where they locked in their rates to compared to where markets are today, because we are keeping a very close eye on things. We're looking at what's moving markets. We're seeing, where are they moving? When would we expect these small opportunities? And then we're protecting them. I mean, that's the most important thing. I was watching something, I don't know how many weeks ago, but now, if you played it back, you would cringe a little bit more. But the advice was not to lock in your rates because the contracts are too long, and a longer lock might cost you another eighth in rate. And unfortunately, if you're getting that advice and you're listening to that advice, you've probably seen your rate go up a full percentage point. We went back and we were updating quotes that we sent out 30 days ago. It's a full percentage point higher right now. So if you were floating that rate because of an eighth in a longer term lock, you are in a much worse position today than if you would have locked in. So we want to protect our clients. We want to give them good advice. We want to treat every loan like it was our own loan. And I think that's the approach that's given us, that we've been able to have a lot of success with. It's like, I say to, this is what I would do if it was my loan. And right now I'd lock it in. I don't think you want to gamble with rates at this point.
No,
What
you,
the markets have done.
you absolutely don't want to do that. And that's one of the most important things to look for in any service industry, or even if you're buying any products, is the value that the person is giving, the value that business is giving out to you. And I see that within your company and within your team members throughout Embrace, is the value you are giving your clients, the value that you're giving the customers and the buyers and the real estate agents that you're working with, that how you stay so close in communication and how close that you stay in with your buyers. Like, this is what, like you said, if I was making this loan decision, this is what I would be doing.
Yeah.
And that's absolutely so important. So like, how can, if somebody had any questions for you, I know you have this cool app,
Yeah.
which I love. I always share this out to any new buyers that somewhere here, right here, you have this cool app.
Yeah.
And this is what I mean. Like, you got the communication down to, like, we're communicating with each other in one streamlined area.
Yeah.
And that's an experience right in itself, that you have this communication platform to talk to your realtor and your lender all at the same time. So everybody's on the same page to get you to your closing table and get you into your home. So
Yeah,
that's
we're very hands-on, right?
Mhm.
But we also realize that people are very technology driven right now.
Yeah.
We mix the two. We use a lot of technology. So we have the app, right? The app is your central hub for your loan. It's where you can e-sign your documents. It's where you can upload your pay stubs, your W-2s. We actually have really cool systems where, uh, we could actually really provide a undocumented approval if you link your bank account. So we have a program called Finicity where you could link your bank accounts, and we will actually take that information, break out the direct deposits, and be able to approve your income based off the direct deposit history. So, we have processes in place where we can make it super simple for borrowers, where they just have to send us a picture of their driver's license, right? And we can approve them for the loan based on the technology that we use. We present financing options using software called Mortgage Coach. So Mortgage Coach, you get a link, personalized link based on the conversation we have. We talk about your payment goals, your out-of-pocket goals, what type of property you're looking for. And those buyers receive a personalized link. It shows them not just one financing option, it shows them multiple financing options side by side, right? What does a $450,000 house look like compared to a $500,000 house? What is 5% look like compared to 10% down? What if I want to buy down my rate? It's all side by side. So we tailor the options to our clients' goals, and we give them a very transparent view of what those financing options look like. It creates confidence for our buyers to move forward and feel confident in the offers that they're putting in and moving forward with the property. It leads to a lot fewer questions, right? Because again, it's so
That's what I was
the
going to
payments
say.
are there,
It's
the APRs
transparent.
are right, the out of pocket, the settlement breakdown. It's all there. It's all available for you, and it's in your hands within 24 hours of us having a conversation, right, about those goals of completing that online application. Um, you know, we were using Zoom before COVID. We want to make sure that it is easy for our clients to get all the information they need, have the explanations and that consultation to make sure things are structured correctly. But we
Yeah.
also don't want it to be a burden for our clients, right? I don't want my buyers to have to come into my office at 7 o'clock on a Wednesday night when I could send them a Zoom link and then record that and give them the recording. And we could use this software that makes things super transparent, and I could screen share with them, and they could do it from their kitchen on a Thursday night without having to, come in. So we make things really easy. I love the technology piece of it, but I think that a mortgage needs to be more than technology. There's so much that goes into the planning. There's so much that goes into the qualifying. There are not, two buyers that are going to fit into the same scenario. There's different ways you could structure things. There's different ways to leverage the mortgage. I mean, I'll give a good example. I was talking to a veteran about an hour ago, and he's putting an offer in on a house. And like a lot of buyers, he's seen the rates go from, 3.5 to, that VA rate's probably at 4.75% today. So he's seen these payments increase. Now, he also has a sizable out-of-pocket budget. And as a veteran, he's expecting and he's entitled to have a discount on his property taxes.
Yeah.
It's just going to take about a year and a half to get that discount. So just, within 10 minutes of just having a conversation, learn a little bit more about the goals. The concern is the payments. We know that those property taxes are going to be going down, but he's got to be comfortable paying them for a year and a half, at least, maybe 2 years. And we identified a plan that's going to work for him. He has, $12,000 left on a car payment, a car loan that he's paying $350 a month for. He's got 3 years left on that. Instead of putting that 12,000 down, we're going to leverage the mortgage a little bit further. His payment's going to be $60 higher, but he's going to pay off the loan. He's going to free up, almost $300 in extra cash flow each month. It's going to put him in a much better position for the next 3 years. And then those property taxes, he's going to get his veterans discount on. So, those are ways, those are things that if we just relied on the technology and I just said, okay, I'm going to send you my app and then I'll send you out what you get from a lot of places,
Mhm.
whether it's Quicken, it doesn't matter where you go. That's what you get in this industry. That's 90% of the people you talk to is,
Mhm.
what do you want to put down? I'll send you my rate. I'll send you a payment. I'll print you out
Yeah.
something on our website, and that's it. We want to plan. We want to be on the financial planning side of the mortgage, because this is the biggest asset you're going to buy. It's the biggest debt that you're going to put yourself in. It has to be planned appropriately, and there's different ways that you can structure it to put yourself in a good position. That's one of them.
Mhm.
That's a great option for that buyer. That puts him in a really good spot. Because the other option he was looking at was paying like 3 points to Quicken Loans, and I said, that's a lot of money to pay up front.
Yeah.
There might be a better way to do this for you.
And that's the beauty of the human aspect of finding out. Like, that's the beauty of your roundtable. It's like you have that technology is great. It's helpful. The human part is 1,000 times more important, because now you're hearing it from another person that, oh, wait, I don't think this plan looks good for you.
Right.
Let's look at the options, and you choose which option you think is best for you.
Right,
And
exactly.
I just had this last week where he was really concerned of the options that he had, and we were looking at it, and it turned out that there was a different option for him that worked out better, and he was absolutely happy. Like, his mind was at ease. And that's where, we come in as service providers. This is the service that you do get to receive, then, is that human part, and that part, that the empathy, that, hey, let's sit down and make a plan and see which one is best for you. And that's amazing. And people are really lucky to have you as their mortgage lender. I can assure you that. Donnie didn't pay me to say that.
No, we get the calls. We get a lot of calls of people who are going into especially now with rates going up. But we'll get the calls where somebody goes into contract, and that's the first time that they see the monthly payments. That's the first time that they see the out of pocket, and they say, "Hey, I was pre-approved up to this amount, and I went and I got an accepted offer on a house at that pre-approval amount, but these payments are way too high." And I say that to a lot of buyers who I talked to on the first phone call. What we can pre-approve you for is usually outside of your comfort zone on what you want to pay monthly or what you can budget monthly towards a mortgage payment. A lot of people say it's hard to get approved for a mortgage. It's really not. We factor in the housing expense. So your principal and interest, your property taxes, your homeowner's insurance. If you're putting down less than 20%, your mortgage insurance. And then the only other expenses that we're factoring in for you when we're qualifying is what's on your credit report. So that would be auto loans, credit card payments, student loans, other mortgages. But we're not factoring in things like your cell phone, your car insurance, your utilities on this property, right? What's your electric going to cost, your oil, your gas? We're not factoring those things in. So a lot of times when people actually break down their budgets and you go to a max pre-approval, unless there's other income coming in, maybe there's somebody who's not on the mortgage, or maybe there's income that we can't use because it hasn't been received long enough. Unless we're in a situation like that, a lot of times buyers say, "Wait a minute, that's above my budget. I'm not comfortable there." So we developed the approach very early on that, hey, we are not going to sugarcoat anything. We are not in. We are not, I don't consider myself in a sales position. I consider myself in a service position. And that means getting over very accurate numbers, very detailed numbers from the start. And that's going to put our buyers in the best position. And we don't, I think that a lot of our buyers stay with us. We're competitive, very competitive on rates and costs. Embraces an excellent lender to be partnered with on the lending side because of how aggressive we are. But it definitely, I think the planning is where we've really been able to grow very quickly, very fast over here. And, we continue to add to it and continue to just try to make things even better for our clients and our partners.
Oh, you absolutely do. How do you spell, I'm sorry, that program that you were talking about?
Mortgage Coach?
Mortgage Coach, I spelled that. Yeah. I got that here. The other one before that, Finicity, did you say?
Oh, yeah, Finicity. So FIN.
I just saw your message.
ICITY.
FINIS
ICITY.
ICITY.
Yeah.
Okay.
So
Like
Finicity.
finance city.
So yeah. So we're direct with, we're a
Oh,
direct lender with Fannie Mae, Freddie Mac. We do so much business with them, and Fannie Mae, Freddie Mac are the two conventional securitizers. So most loans that you're looking at are securitized through those two entities. But we work directly with them. We have the tools to automate things for our buyers. So, again, my pay stubs are direct deposited into my checking account. I bank with Citibank. I could link my Citibank accounts through my online app, and we'll have verified funds through through Finicity's connection to Citibank. Everything's secure, of course, and then the software will actually be able to identify my direct deposits and calculate usable income, qualifying income. So if we're able to do that, and you have direct deposit, we don't need pay stubs, we don't need W-2s, we don't need bank statements. All it is you going into the app and linking your account, and there's a certain number of days that software will have access for the verification.
that is really great information.
Really cool stuff. I think we'll start seeing more of that as we move forward. We're starting to see it on the appraisal side too, as far as appraisal waivers. We talked about the value guarantees. Everything's available online, right? It's real easy to pull these data points, and if that allows us to make the process easier for our clients, we're going to do that and give that option. Some clients don't, they're not quite ready for it, but that's all right. You could send us your bank statements and your pay stubs too. We're good with that. We make it nice and easy. You can just upload it. You literally, you can do everything from your phone, your tablet. You can just upload it right to the app. I've got my payroll on, ADP on my phone. It's easy just to take that pay stub and upload it right to the app. So, I always like to know what my clients are doing. So I've gone through the process on all sides personally, just to see what the client experience is like. And it is, hands down one of the best in the industry with what we're doing with eSnap and, the software that we're integrating with it.
You're right. It sounds so seamless, and it's there. It's an option available for you, and you get the person to help you as well.
It allows us to focus more on that planning and those numbers and helping to get the offers accepted.
Right. Exactly. It prevents that burnout with a pile of stuff. You spoke about, we got a few minutes. I wanted to go a little bit over. I think this is important. Making a strong offer is the underwriting process. So there have been offers now that are being put with underwriting already done.
Yeah.
So that the sellers know, okay, we're not going to have a problem when it does come, when the appraisal and everything, the title comes clear, we're ready for closing. We're not waiting for that part of the transaction now. Is there, I forget the name of it.
The approve to move
process. Yes, TBD. There you go.
Yeah. So we have our approved to move, and then we have a team with that approved to move plus. So we will take our bar. So me and Chelsea have a very set system from the beginning. When we send out numbers, our clients have completed the credit application. So we have a credit report. We have their financial information. We'll send out financing options, and we'll let the borrowers know what documentation we need to complete a pre-approval. That documentation list is the same list that an underwriter would need to really clear a file for closing, with the exception of a homeowner's insurance quote. So we ask our borrowers up front for everything. It's not a big list. If you're a W-2 employee, it's W-2 form, 2 pay stubs, asset statement, copy of your driver's license, right? It's not a lot. I think we used to maybe a couple of years ago, trying to make things easier for the borrowers. It was the important stuff, pay stubs, W-2s, income docs. And then we said pretty quickly, why not just get everything at once and avoid the back and forth? So we request everything from our borrowers. Once we have that in place and our clients have seen the numbers and we've gone through the consultation and they've done their shopping and they know that we are the best option for them, then we're able to offer the credit underwrite. So, what we will do is we're required to send certain disclosures to the borrower. There's no cost, no obligation, but we have their documentation. We say, hey, we're going to send you these disclosures. if you authorize it, we will submit your documentation to our underwriter for an approval. And that's a 24-hour process. If they say yes, we'll have the credit approval out within 24 hours. Now they have a credit commitment. So we can go in with an offer and say, all we need is a contract and appraisal. We've taken it a step further on the conventional side. So it's not available on government loans, FHA, VA loans. We can't do it because we don't have the control on the back end with the appraisals if something goes wrong. But on the conventional side, we will take those offers, right? So if a borrower, if Chelsea was credit approved and Chelsea said, hey, I saw this house and I want to make a $500,000 offer on this house, I can take that listing, I could submit it to our internal team. They will evaluate it within an hour of me submitting, and they will tell us whether or not we can guarantee the value on the offer. If we say, yes, we can guarantee the value on the offer, we can go back with that offer and say, hey, not only are we credit approved, but we are also value guaranteed. So we most likely still need an appraisal completed. It just doesn't matter what the results of that appraisal are. If that property appraises for $480,000 and we guarantee value at $500,000, we're guaranteeing the terms for not only the seller, but also for Chelsea as our borrower.
Oh, wow, that's amazing.
Yeah. So that program, I think that program is going to become, right now, we're probably running about 50%. So, every other submission we're receiving a guarantee on. All right. So it's actually, it's pretty successful. I think when we start seeing these offers level out, we talked about that before, where I think, these rising rates are going to compress the offers. We're not going to see offers going as high over listing. I think we'll be even more successful with that. Because the ones that we don't get is when it's 60, 70,000 over listing price. It's hard for us to guarantee, some of those values. If we can't guarantee the values, as a buyer, you have to, and I think this is part of the reason why we're so successful with getting offers accepted. It's important to know what flexibility you could offer on the appraisal. So as a listing agent, Harjeet, I would assume a lot of the offers that you get in, and one of the first questions I get asked is, what about the appraisal, right? Can you, I get asked all the time, can you waive the appraisal? Normally we don't want to just say, hey, we're completely waiving the appraisal unless you're offering the value guarantee. But in a situation where we're not, there's usually some flexibility we can give. I've had borrowers who say, I have a borrower who got an accepted offer last week, and we were looking at a 5% down payment, and the objection there is going to be the appraisal. What if it underappraises, right? Your borrower is already leveraging their financing to the top. And this borrower said, well, I have another 10,000. Maybe we'll just go in and we'll say, let's put down another 10,000. That'll make it more attractive. Now, my thought was, don't put down another 10,000. Give that 10,000 in wiggle room to the appraisal, right? Instead of just going immediately to putting it down, say, hey, we're putting down 5%, but we're going to give you $10,000 room, a $10,000 window on this appraisal. I think the accepted offer was $600,000. So as long as it appraised for $590 or more, we were good. We were going to move forward. We looked at the numbers. The buyer was comfortable. That $10,000 was enough to get the offer accepted. Right. If they would have just put down another 10,000, we still would have been in the same conversation. What if it underappraises? Right. So borrowers who are putting down higher down payment percentages have more flexibility. We'll show them how an underappraisal impacts their financing. If you're putting down 20% and you have an underappraisal, it doesn't necessarily mean you have to come with more money out of pocket, but you might have a $40 mortgage insurance payment that's on the loan for a year. When we actually break that down side by side using the mortgage coach software, there's definitely a comfort level. A lot of buyers go, oh, that's it. Like, we could do that. And then you're able to give whatever. There's got to be a comfort level, right? Some people say, well, I don't want to, if it underappraised by 50,000, I don't want to give them 50,000. Maybe it's 20, maybe it's 25, 30. It depends on the buyer. But, we help with that type of planning, really breaking down the numbers and showing what the impact is with under appraisal situations. If we give that wiggle room, gets the borrowers comfortable, when they actually see the numbers and that the impact isn't, usually it's not very drastic. And then the buyers are able to get the offers accepted. And I'd say the majority of the time, 99% of the time, we had nothing to worry about to begin with. The appraisal comes in and we're fine. Good thing we had that conversation. We just didn't let this house go. Right.
Yes, absolutely.
So definitely important on that side.
That is really important. It's just we want to make sure that it's gonna actually be able to go to the closing table. So,
Right.
like you said, 90% of the time it's fine. It's just there is that 10% chance that it just might not be.
It might not appraise, yeah. And then, but again, what's the difference for the bar? The more money that you're putting down, the more flexibility you have.
Yeah.
And listen, we've gotten offers accepted where the bar does
Mhm.
not have any flexibility.
Mhm.
What we're able to work with is our time frame, right?
Yep.
Again, we're going to have everything done. We order an appraisal, we expect that appraisal back in a week to a week and a half. So for me, hey, if you want to put something in the contract that gives you an escape clause at a week and a half, if we don't appraise, put it into the contract. Let's try to turn this around quickly, right?
Okay.
Again, a lot of times we talk about these appraisals, and yeah, I mean they're a concern as things go higher. I think they become less of a concern again as these offers compress a little bit. But definitely something we talk about. Definitely part of the planning. You have to talk about it. It's really important for a buyer to know what those numbers look like and what
Yes.
that impact is. And can they be more aggressive with the offer through something like a $20,000 wiggle room on the appraisal, right? That usually does it. 10, 20. You don't have to completely waive it, in my opinion.
Yeah.
It's there's usually a sweet spot there where everybody's pretty comfortable.
Yeah. I actually had an offer that, I actually put in an offer where the listing agent came back and said, "Well, can you get rid of the appraisal,
Right.
like waive that and the inspection?"
Yeah. Well, that's,
I was like, I don't want to tell my buyer to not go through and not.
yeah, that's not something that we would recommend.
Yeah.
I mean, inspection for informational purposes. If the buyer wants to say, "Hey, listen, we're not going to come back to you and ask for anything based on the inspection," that's fine with me. But I think you have to have the opportunity to identify something that wouldn't cause you to move forward with the house, right?
Exactly.
Right.
So yeah, usually our advice is
Hmm.
get the inspector in there. You can tell the seller, hey, it's just for informational
Yep.
purposes. But I think that's something where my advice is draw the line. I mean, full appraisal waivers too. No matter how comfortable we feel with the property, there's going to be a point where there's risk with a full appraisal waiver. We had
Mhm.
one in New Jersey. We didn't know that they were going in with a full appraisal waiver until we got the executed contracts, and that was one of the few that we actually had a big appraisal issue with,
Oh,
which is
wow.
why they were pushing for it so hard. And that was a scramble to get that one to closing. And it impacted the bar. They had to come with a little bit more money out of pocket than what they wanted to do, even though they're putting down a sizable amount. And then you have that taste in your mouth. Well, did we really just, in
Yeah.
hindsight, I mean, that was back in the beginning before the values went up. So I'm sure they're in a good position right now. But it's one of those things where if anybody's watching, they're going to be reaching out to us, like keep us in the loop. We want to be part of those conversations. I'll give you my thoughts. Usually there's some middle ground where you're protected, but you're still in a position where your offer is very attractive.
And I want to thank you for giving me the opportunity to share your experience with, the audience that's watching and my friends and family and my audience over here. So take the table.
Oh, well, yeah, Harjeet, thank you so much for having us. It's always nice to talk. It's always nice to talk about the market and what we're aiming to do for our clients here on Long Island. It's just again everything that we have in place is to put our buyers in the best position. Our favorite thing to do is to celebrate with the closing pictures and see these buyers get into their homes and do it in a way that's not the nightmare stories that you hear. We want to
Yeah.
do it stress free. We want a good experience. We want our buyers to feel confident about the decision to move forward with a purchase. We want them to feel like they made a good investment and that that there's big benefits in buying the property because it's a leap of faith. It's scary. I've gone through the process. Chelsea has gone through the process. Even when you work in this industry, you
That's why
kind of
it's
see it
so
from
important to know what to expect.
right. Yeah, you see
Yeah.
it from the other side, and you go, "Oh, I get it. Like I get it." So we want to
Yeah.
take that stress out. We want to make it easy. We want these buyers to be in a good position. We want to celebrate with them.
That's amazing. Let's celebrate together. I
Yeah.
love that.